We can start. We are live now.
Hello all, welcome to this live expiry day market insight webinar. Oh, I am audible, right, Ravi?
Yes, yes.
Okay. So again, welcome all. Good afternoon. I am Nandisha from Prime Research of HDFC Security. So today, in this expiry session, we are going to discuss how the various derivative indicators are placed at the beginning of the day, that is yesterday, how they have changed till now. So market has started at 9:15, now we are almost at 12. So how they have changed as compared to yesterday. What are the charts suggesting and what are the important level to track for the Nifty expiry, and outlook on the Nifty, which derivative trading strategy one should adopt for the today. So let's start with the what the data was suggesting as of yesterday. Shubha, is my screen visible? Ravi, is my screen visible? Yeah.
It's
Okay.
visible.
So let's start with the yesterday's data. As you can see from our report, yesterday we witnessed a 2% addition in Nifty future open interest, and Nifty fell by 0.42% yesterday. So yesterday actually we have witnessed short build-up in the Nifty futures. Now coming to option data, we have seen that Nifty put call ratio fell sharply actually to 0.76 from 1.02 levels. And this fall in put call ratio was largely on the back of call lighting at 26,100 and also 26,000 levels. So yesterday's data was suggesting one should adopt some cautiousness, as we have seen witnessed short build-up in Nifty, put call ratio fell, and also we have seen aggressive call lighting at 26,000 to 26,100 level. Now coming to Bank Nifty, there was slight different in data as compared to Nifty. In Bank Nifty, we have seen long unwinding. Open interest fell by 5%, while Bank Nifty fell by 0.05%. So we witnessed long unwinding in the Bank Nifty futures. While the put call ratio of Bank Nifty almost remained flat at 0.93. Day before yesterday it was 0.96, and yesterday it was 0.93. So Bank Nifty data was not that bearish, but Nifty data was slightly bearish as compared to Bank Nifty. Now coming to FI's data. Actually, after a long time, FIs have started buying in index futures. FIs have net bought 1161 crore in the Nifty, and in Bank Nifty they net bought 325 crore. And if you were to see the breakup in Nifty, as you can see, the open interest has risen, so they have created long buildup, while in Bank Nifty they have covered their shorts. So actually, FIs have started buying in the index future from yesterday. Their long to short ratio, basically long open interest divided by short open interest, that increased to 0.17 from 0.14. But this ratio still indicates that FIs are still aggressively short. Out of their total positions, more than 80% of positions are on short side. But yes, yesterday there was first sign visible where they have started creating longs. Now coming to today's data, let's move to today's data. Today you can see from this our website HDFC Security Invest, right? We have seen long unwinding in the November future, while there was short build-up in the December and January future. But more or less you can see the open interest change is not that large. So as of now there was no major indication from the future side. Now coming to option data. As I can see today the put call ratio, which was 0.76 yesterday, now it has moved up to 0.81. So actually some stability has come from the put call ratio, and this rise in put call ratio was on back of put writing at 25,900 to 950 level. You can see here the open interest at 25,900 put is 302 lakhs, while 25950 put is at 247 lakhs. So we have seen put writing at 25,900 to 950 levels, while on the call side, the open interest stands highest at 26,000 level. So 26,000 level, we have seen some call writing. So basically, as of now, option data suggests that we are broadly within the range of 25,900 to 25,000 to 26,000 levels. The put writing at 25,900 suggests that market is unlikely to fall sharply, while the call rating at 26,000 level suggests that if market were to sustain above 26,000 level for some time, we might see a sharp short covering. So although yesterday's data was slightly bearish, currently the Nifty's data suggests that we might move higher as we have seen rise in put as we have seen put call ratio has risen, and also the put rating has seen at 25,900 to 950 levels. Now, Subhash, can you give technical view? Are you there?
Yeah, am I audible?
Yes, you are audible. You can go ahead.
Yeah, good morning, everyone. So, coming to the technical view, Nifty remains in a strong uptrend. Can you see? Okay, you can see the chart on the screen. I'll just share my chart. Okay, there's some issue here. So Nifty remains in a strong uptrend, and currently it is holding above the 20-day SMA, and the recent low of 25,856 is a strong support, which also roughly coincides with the 20-day SMA. So as long as 25,800 is not broken, the positional trend will be up, and one can use any dips to buy. So that should be the strategy for the time being. And intraday, we have seen a good bounce back from today's low. So it looks good for the intraday purpose to be long. Nandish, could you tell us what are the important support resistance levels from the derivative option distribution chart?
Yes, so as I have mentioned, we have seen put rating at 25,900 and 25,950. So from option data for today, the strong support seen in that range between 25,900 to 25,950. On the higher side, yes, 26,000 is the level where we have seen call rating and we have seen highest addition in calls. So 26,000 is likely to take as a hurdle from the option data. But if we were to cross 26,000 and if it stays for some time above that, there is a higher possibility of short covering yes, as I discussed earlier. Yesterday we have witnessed some short buildup in Nifty futures. So if market were to sustain at higher levels, we are expecting a short covering to come. So from option data, as of now, it seems that 25,900 is the lower level where we might find support, while on the higher side, 26,000 to 2620 is likely to take as resistance. Once we cross 2620 level, we might see a sharp short covering, which might push Nifty to 26,100. That is what the option data is suggesting as of now.
Nandish, any indication from the implied volatility? What is it suggesting?
So implied volatility of call option is around 8, while put option is around 12. So that suggests that people are still cautious. But if we were to sustain about 26,000 level, then we might see a sharp short covering. So as of now, IV suggests that we are not likely to show any large movement. IVs are normal. Historically, also we have seen that whenever the IV remains into band of 8 to 12, market doesn't see large movement. So here the IV data suggests that it is advisable to go for strategy, go for naked options. The IV's data suggesting that we might not see that large movement. So anyone want to do a strategy, it should be bull spread or bear spread. That's what the IV data suggesting as of now.
So Nandish, considering all this data, which strategy you would suggest for traders for this expiry?
Yes, so all in all, let me discuss. First of all, we have seen put call ratio of Nifty has increased to 0.82 on the back of put rating at 25,900 levels. Moreover, as Subhash has discussed, technically also we have seen some buying. Technically, intraday chart market looks strong, and the lower IV suggests that we might not see a large movement on the either side in the today's expiry. So our advice is that in considering all these indicators, it is better to go for a spread strategy. But as the data is suggesting some bullishness, as of now we are recommending a bull spread strategy. Here we are advising to buy 26,000 call, which is trading at around 34, and simultaneously sell 26050 call, which is around trading at around 18. So here in this strategy, your cost would be around 17. And if Nifty were to go about 2650, then your maximum profit would be 34. So risk reward ratio is 1:2, and your maximum loss would be 17 rupees. And as we don't expect large movement on the either side, we are suggesting a bull spread strategy where your risk reward is favorable. So our advice is to go for bull spread strategy in Nifty, buy 26,000 call and sell 26050 call.
Yeah, thanks, Nandish. So just to summarize what all we have discussed. So looking at the put call ratio of the Nifty, it has jumped today to 0.82 on the back of put writing at 25,000 strikes, 25,900 strikes. And we are seeing call writing at 26,000 to 26,100. FIs have also been building longs in the index futures from yesterday. And the FI long to short ratio has started increasing to 0.17. So this is a good sign, because if FIs continue to unwind their shorts, then that could help the Nifty to move higher. So considering all this, we are recommending a bull spread in the Nifty for today's expiry. We are recommending to buy the 26,000 call and sell the 26,050 call. Cost is around 17 and the maximum profit is around 34. So risk reward ratio is also good, 1:2. Yeah. So anything else you want to add, Nandish?
No, so Bas, as you have discussed, considering all data, we are slightly bullish for the today, and positional trend remains positive till Nifty trades about 25835. Overall, we think that in the second half, market may move up. So bull spread is the strategy one should adopt in this kind of market. Thank you all for joining. Have a nice trading session.
Thank you, everyone.